If you're thinking of retiring, do you know what sort of retirement income you will need? Do you know what your annual spending is going to look like in retirement? And do you know how much income your current pension investment pot would be able to deliver for you in retirement? When I start working with clients, many struggle to comprehend what their annual spending in retirement will be. But the answer to this question is key because it will determine when you can actually retire. So in this video, I'm going to go through some scenarios and what the average retirement spend looks like and what sort of pot size you will need to be able to deliver that sort of income. I'm Carl Roberts, Chartered Financial Planner at RTS Financial Planning. So according to a recent survey by the Pension and Lifetime Saving Association along with Loughborough University, £29,100 per annum is a typical retirement income required for a married couple for a moderate lifestyle. So what does this moderate lifestyle cover? Well, let's explore it in a bit more detail. So the moderate lifestyle assumes that you'll have some level of financial security and a bit of flexibility. In terms of your home, it covers some maintenance done by yourself and some maintenance that you'll be able to pay and get help with. It covers a £74 per week food shop, and in terms of transport, it assumes you'll be running about a 3-year-old car which you replace every 10 years. For holidays, it covers a 2-week trip in Europe and a long weekend in the UK each year. And in terms of a budget for clothing and footwear, that's about £750 per person each year. And finally, in terms of gifting presents, it assumes about £30 per present gift. So that's your average moderate lifestyle for a couple. There's obviously other ends of the scale. The other end of the scale, the research says, is a minimum level of retirement, which is £15,700 per year required in income. And for a really comfortable level of retirement, this survey shows that the annual income required is nearly £50,000 per year for a couple. But of course, these figures are averages. Your retirement could look very different, and your retirement spending is very personal to you. One way to look at what your retirement spending could be is to look at what your spending is now, as most people I find will want to at least maintain their current lifestyle when they retire. So take a look at all your current bills, all your monthly outgoings, perhaps reduce the commute because you won't be commuting to work once you're retired, but perhaps add a little bit more for travelling and socialising. Some research out there discusses a U-shaped retirement, and what this basically means is it assumes that people will spend more in their early years of retirement whilst they're fit and healthy and raring to go on all their kind of holidays and travel. But then that retirement spend sort of tails off a little bit as you get older and you don't go on holiday as much, you perhaps don't run 2 cars, those sorts of things. And then the spending spikes up again as you get towards the end of your life and perhaps need care. But this theory has been challenged recently because what the data has shown that actually when people hit retirement, their spending gradually just decreases over time and maintains that trajectory. This is because typically if you've been a good saver and you've built up a decent pension and investment portfolio, it's very hard to break that psychological impact of saving. So you'll tend to still be careful with your money, and actually a lot of older people in retirement still save a lot of money. So when you know what sort of retirement income you're going to need, you need to know what sort of pot size that will deliver that retirement income. And here we're mainly talking about defined contribution pensions, the pensions that you pay into, your employer may pay into, and you invest the cash, and you've got a pot value sitting there. So how much income will your pot value deliver? Well, when you retire, you've basically got 2 choices when you want to come to withdraw money out of that pot. You can go and purchase an annuity and secure your income for the rest of your life, or you can draw down and take money out of your pension as and when you want to. So if we just start with drawdown, £500,000 is the pot size roughly that you're going to need to be able to deliver about a £24,000 per year gross income. Now obviously in retirement you may also have the state pension, and if you've been contributing national insurance contributions for around 35 years, you'll get the full state pension, which is about £8,500 per year. So if you've got a full state pension, 500,000 will deliver the income you need that will hit that moderate lifestyle income in retirement. But what about drawdown? What about utilising your pot and withdrawing money as and when you need it? If you want to draw down around £24,000 per year from a £500,000 pot, and let's say you start at age 65 and your life expectancy runs all the way to 100, there's a 78% chance that you'll be able to withdraw that level of cash without running out of money before age 100. And that model is based on thousands of different scenarios, thousands of different investment rates of return and different inflation scenarios. So there's a fairly decent chance that you might reach your target, but it requires a lot of ongoing monitoring and understanding of when to draw money and how to invest your cash. So the key takeaways here are: number one, you need to know what retirement income you'll need in retirement. So what's your annual retirement spend going to be? Number two, once you know your annual retirement spend, you can determine what sort of pot size, overall pot size, you will need at the point you come to retire. Number three, you need to know where you stand today. So add up all your pension pots, your investment pots. What is that figure? How far away is it from what you actually need at retirement? And number four, you now know the gap and what you need to save or how you need to invest to be able to reach your target goal. Here at RTS Financial Planning, we have very sophisticated software that will crunch all these numbers and work this all out for you. But the most important part of the software is our stress testing. Going back to that percentage figure earlier, that's the figure you need to know. Because yes, you could have a pot size of 300,000. You could work out that perhaps you can take 4% a year out of that. But what happens when the market crashes and you need to make withdrawals? What happens if inflation takes off? We can stress test all of that data and give you a very definitive probability of how good you are in terms of your retirement plan.